We are 15 minutes away from the top of the hour as we continue to update you on this Crop Progress Tuesday. And this overnight reports from USDA, certainly a catalyst of the numbers that we're seeing in the advance today in the grain complex. Again, our thanks to our friends in St. John's, Michigan, AgriLiquid, great partners here on Market Day Report. And we go from St. John's, Michigan to Chicago at the CME Group. Todd Horwitz, another good friend and good partner here, great partner here from Bubba Trading, BubbaTrading.com. Todd, yesterday at this time, you were talking about if this market continues a bit lower, I'm a buyer in here, especially in beans. And so here we are. Another, what are we, a dime higher today?
Good morning, Mark, and Bubba and AgriLiquid. What a team, huh?
Yeah.
Anyways, so, you know, the markets are having a little bit of a rally. And I think, you know, yesterday I texted you and I said, look, if we stay down at these levels, these are great levels to be a buyer. I don't really care what the reports are going to be, but what the price action really drives markets. Money drives markets.
Yeah.
And, of course, we got down to these levels. We got down to 909 in beans on Friday, and they held really well yesterday, which indicated that they should be bought. I mean, that's really what you look for when you're looking at it from a speculating or a trading side of it, but also when you're the farmer or the producer. These are key signals that will help you make a better decision on whether to sell or buy or what you're trying to do when you're looking at it. And I think that is, when we look at the overall market, beans were pretty much of a what I would call a no-brainer buy because of the way that they went down. They went down so fast that it was, you could see that it was more panic selling. And once the panic goes away, it becomes a buy. And of course, corn has held 365 like a champion, then it held 370, and now we're pushing up against 380. And of course, I still say that December corn is going to go well over $4.
And we're at 398 at the high when we're right there basically now, December corn, looking at that 4.5, or make that 6.5 higher on the nearby July. So a one-day reaction to the crop condition reports, and can we move higher from here in your view?
Oh, no, I think we're going higher, Mark. I think that, you know, my only concern in the whole complex would be soybeans. I'm going to see what they're going to do at 940. But, I mean, corn, you know, I think is probably, I'm looking for mid-4s in December corn when it finally gets there, and I'm looking for mid-5s in wheat. So again, I think that the wheat and corn have acted tremendous and look really good based on the price action, based on the money flow, based on the way the markets look. So I look at those as very bullish. My concern is soybeans, but if soybeans can act well here and get back to 940, they'll probably sell off a little bit and then break through. I think soybeans look really good as well. So I do like the grain complex in general.
Now, when you talk 940 beans, you're talking the new crop or the nearby?
I'm talking about July right now.
Always talking July. Let's take a look at those beans right now then. As you mentioned, Todd likes where he sees the beans here. And if you say July gets to 940, we're 933, 934. So another 7 cents higher, you think might be near term here, might be a little bit of a ceiling and a little bit of resistance.
Yeah, I think that will be I mean, if it works that way, it'll be great because that would just, a little pullback would be great for acceleration to get through it the second time through. So again, I'd like to see it happen that way. I think it would work better for everybody that way because the best thing that we want is either traders or farmers and producers, we want to see consistent trends where they're going higher. And I think that when the price action dictates that, I think you get a better move and the up move becomes much stronger as well, and it lasts a lot longer.
And as optimists, and you want that market to go up limit every day if you're a producer out there, but you're saying that's not going to be healthy longer term. Is that what you're kind of, in a summary, you're kind of saying we need to come up and go down a little bit, and then the upside even could be higher?
Trending markets, if the market is trending higher, little pullbacks actually add strength to the market, and that's what you really would like to see.
All right, and real quick here before we leave the wheat trade here as well. Wheat is kind of where it all started this morning, and we'll take a break, get Todd back in livestock. But we are higher by 10 to 11 cents in Chicago wheat. Kansas City currently up 11 to 12 cents nearby July at 442. And Minneapolis, the dry weather continues in the northern belt. July up over 14 cents and over $6 Minneapolis wheat. Take a break, come back, check the livestock trade. Todd Horwitz rejoining us after this. Be right back. We We are back. Todd Horwitz in Chicago with Bubba Trading, BubbaTrading.com, giving us insights there in the grain complex. An up day here. Are we ever double digit in a lot of cases here? Over in the livestock side here, we are higher as well across cattle, feeder cattle, and hogs. The beef complex overall, how comfortable are you with where we are now with August 127 plus?
I'm very uncomfortable. If I was an owner, I'd be uncomfortable. Now, again, longer term, I'm a big fan. But I think that the formation, I mean, if we look at the fat cattle, we're in backwardation. That's never a good formation in general. And again, I don't think that the fundamentals add up to where we are in price. I understand that the futures are well below the cash, but why are the futures being held down? That's where more of the action will take place. And I personally believe that there's somebody is stuck short here, and they're forcing these markets higher. I think there needs to be a sell-off. I think it'd be much healthier to have a sell-off because we need to reverse that backwardation in fat cattle anyway. So I think that would be a better situation anyways.
So would you, if you're a producer out there, do you want to take advantage if you think we're a little bit too far too fast or whatever the case might be, doing some pricing right here and now into the summer and fall?
Absolutely. I think that, again, I'm from the school that we always would hedge it anyways and we would protect it. And there's ways that you can protect it very inexpensively right here and at least lock in near these prices. If we go higher, you get to participate. You don't have to give up the entire potential profit. You can actually, there's ways you can lock in price and allow for the upside to continue. So if it turns out to be a big market, if it turns out to be some disease or some problem, then you're still playing. Yeah. But if it happens to fall back down, then you're totally covered within a buck or two of where you are right now. And that's the best way always to create your money, because whether it's crops or stocks or whatever it is, it's always about the money.
Very good. And that's what BubbaTrading.com is all about, viewers and listeners. Information there for producers, especially to help you put together your plan. I get the numbers here in the cattle trade, but I want to get your thoughts on the pork complex here as well. Higher through the day. How do you feel about where we are in the pork trade?
The other white meat, you know, it's amazing. I thought it looked Friday and yesterday it looked like it was in a probably break. 80 is the key level. Above 80, I'm not a big fan. I'm not a buyer here. I'm looking for a pullback, but again, I want to be a buyer, but not here. I think it's going to break below 80, and I think we're going to get down into the mid-70s or a little bit lower. Then I'm looking to be a buyer and scoop it back up again.
Yeah, really good. Well, we're going to be a lot of smiles at the World Pork Expo starting tomorrow in Des Moines, Iowa, with where the market is now and where it has been. Todd, thanks for your time. I want to get the numbers as promised to our listeners and viewers, and we really appreciate your input, and we'll talk to you tomorrow.
Thanks, Mark. Have a great day.
Thank you. Todd Horwitz, Bubba Trading, BubbaTrading.com. Great friend, great partner here on Market Day Report. All right, as promised, here we go. Live cattle futures, June in delivery, still very important in the cash trade. June 133.82, still what a $10 discount in some cases to, or August especially as more active trade is a $10 discount to where the cash is trading. Normally it's about $5 this time of year. August is up 92 points, just over 127. Feeder cattle, we'll talk Thursday with Ed Servant about the cash market here. It would be a very active week, it would seem, in our auction markets around the country. Feeder cattle futures higher, August up another 63 points at 160.5, and they just missed 161 at their high, 160.90 for the high for August feeder cattle. And looking at the lean hog complex, Todd Horwitz thinks that $80 might be a key level to see if we hold or not in the July contract. June in delivery there, 82.15 is up $1.43. July and August more actively traded. July up $1.28. So far so good as far as holding above $80, certainly 81.70, and that's again about 12 points from their high of the day. So we'll keep an eye on that through the day, and our thanks to Todd and all our analysts.
All right, thank you, Mark.
Sure, you bet.